Hey everyone, welcome back to Your Nifty Guy. I hope all of you are doing well. It's Tuesday, 11th November, and what a session it's been. Today, Nifty once again showed us how important it is to stay patient and read the price action the right way. In this video, we'll break down today's move in detail, where the momentum kicked in, where the market hesitated, and what the overall structure was hinting at throughout the day. Then build a complete trade plan for tomorrow, including the key levels I'll be watching, possible scenarios based on the current data, and how I plan to approach both sides of the market. If you find value in these daily breakdowns, make sure you like this video, subscribe to the channel, and share it with your trading buddies. All right, so let's get started and we'll hit the chart straight away and decode today's price action. Uh, Today in the morning, there was some problem with trading view, where in Nifty and all the sectors and every component, the data was delayed by 15 odd minutes. I thought it was a technical error would be fixed soon. And I did not do anything. I was simply waiting. And once I refreshed it, there was some form which had to be filled up. Uh, so that the delay gets taken away. And I don't know how many of you guys faced it. Now, I did not use the broker charts because I have all my levels and everything marked on this particular chart, and on the broker chart, you're not able to save them. So, markets actually opened with a gap up and immediately went into a selling mode, right? Nothing could have been done. Even if it could have been done again, we could have traded this particular day low breakdown, right? So this was yesterday's day low. Uh, Around here, market consolidated, took a liquidity out here, and then once this low was taken out, a small scalp could have been taken again. But then again, I was confused and trying to fix the charts of trading view, trying to fill up that form and everything, and so I did not ta trade earlier in the day today. And once the charts got fixed, you can see exactly at our support level. So this was the 75 minutes fib support that we had drawn, right? I'll quickly show you guys, right? So this entire up move which had come in, this was the 75 minutes time frame. Fib support the 0.5 to 0.618 levels, and you can see how beautifully the market came here, formed a beautiful W, a reversal pattern at a support area, which we had pre-identified, right? In our analysis yesterday, we had pre-identified this area. So once you are done with all these analysis and you have your levels marked, right? And then you see a positive price action around that period, particular level that you have already marked. That gives you much more confidence. That does not leave you in any second thoughts or any second guesses. And you know that, okay, you have prepared for it. This is a support area. Market is forming a good double bottom around here. This is the entry. Now, for double bottoms, like somebody had messaged me on Instagram asking me about the validity of a pullbacks on on trading double bottoms, right? So as I said, on double bottoms, I don't wait for pullbacks because see, this is the market structure which was coming in down. Now we don't long the markets in the first instance itself, right? So this is the pullback which is already there, right? Which forms the second uh, leg of the W or the double bottom as we like to call it. And that is the reason we don't have to wait for any further pullbacks to trade this, right? We only wait for pullbacks when we are trading previous day low, previous day high, or important level breakout or breakdowns, right? So this was the first trade for me earlier in the day, again around midday. I entered at the break of this neckline, and I exited around here, right? So if you see, this was after the entry, it was a very smooth sailing trade, not much uh, adjustments or maybe thoughts of exiting being triggered. Out here, markets actually formed kind of a double top and also broke down below this particular low, because of which I exited this particular trade. Uh, at the time of entry, my stop loss was around here, and at the time of exit also, I did not get in time to trail the stop loss apart from this particular double top formation, which again was a resistance area. Plus, we had not broken out above the day's high, because of which I decided to exit this particular trade, and I captured around 40 odd points in this particular trade. Now, after this particular trade, because immediately after my entry, markets was again showing some signs of bullishness, and it was kind of a flag and pole pattern. Now, had I not, so this is the pole, this is the triangle consolidation, right? I'll quickly delete it. This was just for showing you guys. Had this been the first trade of the day for me, I would not have taken this particular trade because the market had already moved a lot and the probability of it going further higher reduces, right? Again, it can definitely go much, much higher, but then the probability reduces. And that was the reason why had it been the first trade of the day, I would not have traded it. But then because I already had a winning trade in my kitty in the first, at the start of the day, because of which at the break of this particular high, I again entered into the longs. Of course, I changed my strike price. So around here, when I had entered, the strike price was 25,400. Around here, when I entered, I changed the strike price to 25,500. I always buy in the money, and I bought next week's expiry, right? Uh, this particular trade, again, I had entered it with a thought that, okay, out of the 40 points that I had made in this particular trade, if this gives me a stop loss of 20 odd points, I will exit and I'll close the day. No further trades, nothing. I will still close the day in a very good profit. Uh, so that is how you actually grow your capital. Once you have a cushion of a profit in one of the trades, you can take some riskier bets, right? So, like I said, had it been the first trade of the day, I am explaining what goes on in my mind. Had we not got a clear structure around here, maybe this was the move which came in, and then this pull consolidation came in, and then the breakout was coming in. I would not have traded it, right? Honestly, I would not have. But because I had a cushion of a profit from the first trade, I decided to take a second trade. And out here, this is the trade. This went up above previous day's high, broke out above day's high, previous day's high, very close levels, and then I exited this particular trade around these levels, right? I didn't want to risk a lot in this particular trade. And this kind of looked like a day high breakout failure, although the markets moved up significantly after that. But then again, you what you get is what is in your uh, whatever it is, profit of the day or whatever it is. You like to call it luck, you like to call it your जो book किया सो अपना बाकी सब सपना. So this is where I exited this trade with a profit of around 32 points and total 72 points captured in the two trades today. After this, I stopped looking at the charts. I did not even want to look at the weekend, sorry, the expiry special setup that I actually look at. I had a good day, very good day. I closed the system and I got busy with other work, right? And so it was a good trading day. How was it? How was the expiry day for you? Did you guys make use of the reversal pattern that is a good setup to trade reversals? In case if any of you is not aware of it, you can go and check the video which is there already on my channel about how to trade reversals like a pro. With very small stop losses, you can get big targets, right? So again, see, it is not at all possible for anybody to enter the trade around here and exit around here, here, here. So that is what I am trying to tell you, right? You have to keep taking small trades, small wins, and then compound them into bigger wealth, right? And that is how it will work in the long term for you, right? If you would have been see, in the hindsight, we were looking at the markets. Okay, so markets moved from this level to this level. This is the profit potential that was there in the market. If you go on X, there are posts which are saying if you bought a call for around 10 lakh rupees at this 11:30 a.m. today morning, and then at the end of the day, it would have been around 1 CR, 1.5 CR, whatever it is, right? So that is not at all possible. Number one, nobody is going to do that with the entire capital, right? Even I use a small portion or a small percentage of my capital for each of the trades, right? So this trade, again, I used only 20% of the entire capital that I had. This trade, again, I entered with the same quantities. So that is something which I want you to pay attention to. So I hope the expiry was good for you guys as well. Now, coming to plan for tomorrow, we don't need this level. The 75 minutes fib level has already done its job because we have already got a new high. We don't need this level, right? We start with a very, very clean slate and we'll start with the daily time frame. Now, on the daily time frame, see, although the bias, like I told you guys yesterday as well, my bias is on the long side, although we can see good buying pressure. So this is how you decode the candles, right? We opened at these levels, went down quite a lot, even below previous day's low, but then a good amount of buying could be seen from the lows, and we have closed near the highs, right? Which is above the opening, right? So this is a very, very positive candle. Now, on a daily time frame, this is still not a cue to go long, right? We have come here, we have retested the levels. Perfectly fine. We can continue the journey upwards, but then again, I would be waiting for some retracements or some consolidation on the daily time frames before taking a trade based on the daily time frames, right? But that is something which we do not take sell on a regular basis. On a regular basis, my trades are on an intraday basis strictly, and that is the reason why most of the analysis is done on the smaller time frames. For tomorrow, again, I will be using fib to get to mark our important levels, and then we'll make a simple, crisp plan for tomorrow, right? So be with me. All right. This is the support. We did it on 75, so 75 minutes. Fib. Perfect. Okay, so right, this has also done its job. So this is the weekly time frame fib support. So the market has taken support, but then again it can come to retest forming a double bottom. So we'll just keep it on the charts for some time. Right now, for tomorrow, plan has to be very simple. Number one trade that we can all look for is, of course, a trap setup. We open flat, minor gap up, go, we get some bullish sentiments above the day's high, and then the low of this candle gets taken out, right? So this is the trap scenario wherein all the people who would have missed this rally would be eager out of FOMO. They would be wanting to create longs around these levels. And once the low of this candle gets taken out, all those people will be trapped, leading to a good momentum on the downside, which we can trade, right? So this is one setup. If it forms earlier in the day and subject to all conditions being fulfilled, only then we will be taking this trade. Apart from this, of course, long above days high with a pullback is there. We can look for any buying opportunities around this important fib levels. If we open the gap down or we see some selling pressure like today and we approach this fib level and then we see some buying like today, we go long, right? And below this, we will be looking at some shorting opportunities. Of course, these are the levels around which if we are taking a short trade, we have to be absolutely, absolutely careful, right? But then again, like I said, the bias is for trades on the long side. So long side trades, we go in with full quantity, full force, all guns firing, full action mode. On the short side, we keep our horses tightened and we go with lower quantities. We trail tightly. We keep our stop losses very strictly. So yeah, that wraps up today's analysis, traders. I hope this breakdown helps you plan your trades better and approach tomorrow's market with more confidence and clarity. If you learned something new or found this video useful, don't forget to hit the like button, subscribe to Your Nifty Guy, and share it with fellow traders who would benefit from these insights. As always, remember the goal is not to predict the market, but to prepare for it. See you in tomorrow's video with another detailed trade plan. Until then, trade safe and stay disciplined. Cheers and thanks for tuning in.